So welcome back to a new episode. Somebody asked me to look at Sensonics, so here we go. We are looking at Sensonics. We haven't looked at this one for a very long time, so you know what, we're going to do a bit more of an in-depth look at this stock. So again guys, this one may be a bit longer. I'm going to try and keep it as short as possible, but again, if you are interested in watching this video, make sure to give it a like and subscribe to the channel, as we do talk about a lot of stocks on a daily basis. Furthermore guys, if any of you do have any suggestions which you do want to see in the future, make sure to drop me them down below in the comments, because I'm more than happy to look at any stocks which you guys do suggest. And again, if they do look like good companies, I definitely will take a bit more of a look into them, and of course make another video on them as well. So again, let's start off today looking at Sensonics. So as I did mention briefly, we have talked about Sensonics before, but tonight we are talking about what we have seen more recently, because we are seeing a bit of a change in share price. And again, after the past 5 days where share price is actually picking itself up consistently, and after the past month where it has been falling, you could be asking yourself, is now the perfect time to buy the dip? Well guys, I am not a financial advisor, as you do know, and nobody knows for sure what is going to happen with Sensonics, but we can look at some of the facts to establish what may happen going forwards. So we're going to start off by having a look on the more detailed Yahoo Finance charts to get a quick look at volume and of course share movements over the past week or so. So volume that we are seeing today is at about 17.92 million. This information is coming from Yahoo Finance. Now for a bit of context, on Friday we saw volume of 11 million, and again the day before that on Thursday, volume of 26 million, and on Wednesday 36 million. So we can see how things have been moving. Now ultimately we can see a bit of a V-shaped turnaround, as the share price has been plummeting consistently from the highs well over $5, and now we are definitely back in the $2-3 range, which is good, because even though it has dipped by a lot, which is unfortunate, it does look to be the case that the stock is definitely picking itself back up, which is a good sign. Now a few things to note is that a lot of the market has had a bit of a tough time in the past few months, so I think, you know what, Sensonics in a way does kind of follow that trend. I mean, I think it was bound to fall from the initial highs, because if we do look at this one over the past year, let's say, or even over the past 6 months, we can see this initial high which rocketed the shares price to well over $4 very quickly, even passing the $5 mark at one point. And I think, you know what, when a share price goes from about, what was it, 40 cents all the way up to these highs of $5, it is inevitable that most people probably are going to take profits. So yes, I think it was to be accepted that a lot of the share price was to come off. I think it would have been reasonable if the sell-off was to stop around here, but obviously we did have those poor market conditions which sent the price even further. So there we go. That's my personal thoughts on what we have been seeing. So we're going to start off by establishing a bit of information about the company which we might want to know. So we're going to go over to LinkedIn, because LinkedIn basically gives us a definition of what the company does. Now again, this is coming from Sensonics, LinkedIn themselves. You can definitely have a look on their website, but I think this small article does sum things up very simply. Sensonics Inc. is a medical device startup company in Germantown, Maryland, United States. This is apparently near Washington DC. They develop transformative glucose monitoring products that are intended to enable people with diabetes to live their lives comfortably and with ease. Utilizing breakthrough fluoroscience, we can see sensing technology. Sensonics actually have continued to use glucose monitoring, also known as CGM, I do believe that is. So we can see continuous glucose monitoring system is being designed to be the first fully implantable CGM that is highly accurate and stable throughout its long sensor life. So that basically tells us what we do need to know about the company and what they do. The system consists of a very small sensor implanted under the skin, and an external transmitter and a mobile phone application which allows discreet, easy access to real-time glucose measurements without the need for a dedicated receiver. So yeah, once more, that does tell us a lot about the company and give us a bit of an understanding about what their products do and the intention of their product going forwards. A very interesting service which I do believe people will definitely want to use in the future. It does have a lot of potential going forwards. I think Sensonics as a company is very interesting. I think a lot of these science startups, or at least these medical startups, are very, very interesting companies. A lot of the time they do bring very unique things to the table and actual, very interesting solutions to real problems in life. So I can see this as being a product which a lot of people could use going forwards. Anyway, let's have a bit more of a look at some of the other fundamentals of the company. The authorized shares is apparently 250 million, and this was apparently updated back in 2015. So again, very out of date information coming from OTC markets on authorized shares, but it is also understandable at the same note because of course this is authorized shares. Anyway, we can see that the outstanding shares down here is 377.8 million, and this was updated on 2021 back on the 26th of the 2nd. So again, that was pretty recent to be fair, and I think that is okay. We can also see that the market cap updated on the 23rd of the 4th, 2021 was 755.766 million. So again, that does show us a lot about the company. So quite a high market cap, to be honest, nearing on $1 billion. But again, that is a few of the security information details which you might want to know. So that tells us a bit about Sensonics and how their structure of shares is. Now let's move on quickly to have a quick look at the short volume ratio for Sensonics. So this is coming from Fintel. We can see that down on Fintel, this information says that there is a short volume ratio for the stock of 31%, if you were wondering. And apparently, the short volume is about 3.67 million. The market volume is 11.825 million. So again, that equates to about a short volume of 31%. So not too bad, to be honest. It is relatively high, but if we do have a quick look at how it has been moving in the past few months, we can ultimately see down here on this graph that it does provide that the short volume ratio has kind of actually been going down for some time with Sensonics. Back in July of 2020, or around a similar point from, let's say, July until November 2020, it was significantly higher than what it is now. Of course, April, it definitely is creeping back up there, but again, nowhere near as high as what we were seeing up here, when it was apparently at 50, or at least around 50. And again, information coming from fintel.io on Sensonics. Now let's have a quick look at some other important pieces of information about the company which we might want to know. So we can see down here on Google, and I use Google because it does make things quite simple for everybody to understand. We can see some information about revenue from the company and also from the EPS expected through 2020. So again, this is a whole 2020 guide of what has been going on. We can see that back in Q4 we had a revenue which was actually about 3.9 million, and this was expected to be 3.49 million, so it was a surprise in the green of 11%. The EPS was expected to be 0.006, actually it was 0.005, so again this is a surprise of 17%. Now, if we do quickly move down to Q3, we can see revenue was actually much better than expected. Obviously, it was reported at 767k. It was actually expected to be 500k. So again, this was a 42% surprise, which is good. The EPS on the shares was, of course, 0.007, and it was expected to be 0.007 as well, so apparently this equates to a 10.5% decrease. Going into Q2, we can actually see that Q2 provided actually quite a lot of red when it comes to the earnings. As we can see that revenue for the company was 261k, it was expected to be 1.32 million, and again this was a surprise in the red of 80%. However, the EPS was actually 0.07 and it was expected to be 0.1, so again this is better than expected, but obviously revenue for that quarter was down. Q1 for 2020, the EPS was actually much worse than expected. As we can see, it was at 0.24, actually it was expected to be at 0.15. So again, this was minus 61.79%. Revenue wasn't great for this quarter as well. We can see apparently down at 95%. All information is coming from Google, so that is my source. So again, we can have a quick look at some of the executives of the company if we do want to. We can see basically up here, we can have a quick look at the CEO. So CEO down here, if we can highlight, is called Timothy T. Goodnow, and again this guy is the president and CEO. We can see he joined the board of directors back in 2010, and in March 2011 he was named as president and CEO. He has been the first instrumental in commercializing the first 90-day excessive CGM system in Europe and 180-day product Extensiverse Excel, which is now distributed in over 15 countries. He also has successfully launched Evers Evers, I believe that is, in the US, and this is something that he apparently did only 40 days after FDA approval. Anyway, that tells us a bit about what he has done for Sensonics. So let's have a quick look at some of his background history. We can see that prior to Sensonics, he was the vice president of technical operations at Abbott Diabetes Center. He also held executive positions at Sens, VRX Biomedical, whatever these names are, but you can see some of his experience down here. He does have quite a lot of executive position experience in quite a lot of companies in very similar areas. We can see down here he earned his PhD of Bachelor of Science degree in chemistry at the University of Miami. So there we go. We can have a quick look down here at the Chief Operating Officer. His name is called Mukal, I believe that is Jane, something along those lines. Anyway, we can see down here that he is the Chief Operating Officer. He is responsible for overseeing the quality, regulatory, and product development stages and global operations, including manufacturing and supply chain. Prior to joining Sensonics, he actually spent 13 years at Medtronic, where he was responsible for managing the development of neurosimulator systems in the spinal cord simulation and sacral nerve simulation as well. Prior to that, he actually worked at Medtronic Energy and Component Center, developing various critical components used across Medtronic's implantable devices. So we can see ultimately about the board of directors, a few of these which we have gone through before. And again, we can quickly go through a few of these. We can see down here we have the Chief Financial Officer, who actually brings over 20 years of financial experience to the table. Ultimately, what I'm trying to say is that this company, in my opinion, the management team is not that bad. What I do like about the management team is that we have a financial officer which has a lot of experience, which is fantastic for me at least. I think that what we have down here is we have a president and CEO which is also experienced specifically in this field, which I do like. And again, the same can be said for the COO. So I do like the team that I am seeing here from what I have seen. Again, this is just my opinion. I definitely would recommend doing more research than just watching this short video, but that is what we are seeing so far. And from the members that I have seen, I definitely do like what I have seen. Now again, we can go through this in a bit more detail, but if we were to go through each member of the team, it'd make this a very long video. So I'm just going to keep it to the first few, which do play the most important roles in my opinion. So another thing that we can see over here on Sensonics' website is that we do actually have quite consistent updates for news. Now this tells us a lot about what has been going on. We can see some updates such as the full fourth quarter and full year 2020 financial results and a few other pieces of information from earlier in the year. But yeah, going forwards we can have a quick look at this information as we have done before. We can see that ultimately in the fourth quarter they apparently generated $3.9 million, primarily driven in orders, which is good. We can see this is from the to support the European install base, which is good. They raised $175 million in proceeds from equity offerings in the first quarter of 2021 as well to strengthen the balance sheet. Fantastic, fantastic, fantastic information. I've said this before, guys. I think that these things like, these direct offerings or offerings in general, I think that they are good for companies if they do what this company has done and help them to strengthen their balance sheet. So fantastic, and I do like this for Sensonics. Anyway, we can see a bit more information on the fourth quarter down here, which is good. Again, going forward, we can see the full 2020 results, which is ultimately the area which I do want to focus on. So again, total revenue for 2020 was apparently $4.9 million. We can see down here compared to the 21.3 million in 2019. Now again, gross profit was increased by $2.1 million year over year, which is good, to be honest, because if you think about this one, the revenue was actually down, however the profit was apparently up. So again, this is good. Anyway, so far guys, I think that Sensonics as a company is definitely not that bad. I think that the fundamentals of the company are very decent. I think going forwards there is a lot of potential for a company like this in this industry. I think that the team that they have leading them is very strong. I think going forwards it could do them very, very well. So thank you for watching this video. As I did say, I'll try and make it as short as possible. So I hope that was the case. I will see you all again very soon for a bit more of an in-depth video on a few other stocks. So make sure to leave me a few of your suggestions down below. See you then. Goodbye.